Hi there, and a warm welcome to Tax File. I am Laure Bala Hassan, and I'm so excited to be your host. On today's episode, we bring you interesting news and information. We'll start up with the latest tax news. Then, over to our Did You Know segment. Hear your opinions in our Vox Pop, and then our Knowledge Zone. And we meet our guest on the professional insights. And end with What's on the Net, where we'll respond to some of the questions you have dropped on our social media handles. Let's get started. Now the news. In a move aimed at bolstering tax administration and revenue generation, Governor Uba Sani of Kaduna State recently hosted a high-profile meeting with Dr. Zak Adedeji, the executive chairman of the Federal Inland Revenue Service. Known for its proactive leadership and transformative initiative, Dr. Adedeji's visit underscores the commitment of both state and federal authorities to drive economic growth through efficient tax systems. Swateku has the report.
During the meeting, Governor Sani and Dr. Adedeji discussed strategies to enhance the efficiency and transparency of tax collection processes in Kaduna State. Dr. Adedeji emphasized the importance of a collaborative approach and shared his vision for a more robust and transparent tax administration. He highlighted the need for a modern technology and data-driven methods to ensure accuracy and accountability in revenue collection. Governor Sani, in his remarks, expressed his administration's dedication to creating a conducive environment for businesses and individuals to thrive. He stressed that improved tax administration would not only increase the state's revenue, but also provide the necessary funds for critical infrastructure and social services. Governor Sani praised Dr. Adedeji's leadership and welcomed the partnership as a step towards achieving sustainable development in Kaduna State. The collaboration between Governor Sani and Dr. Adedeji is expected to lead to significant reforms in the state's tax system. Among the key initiatives discussed were the digitization of tax processes, capacity building programs for tax officials, and public awareness campaigns to educate citizens on the importance of tax compliance. Both leaders agreed that these measures would ultimately benefit the people of Kaduna State by fostering economic growth and ensuring better service delivery. This meeting highlights the critical role of strong leadership and innovative solutions in addressing the challenges of tax administration. As Kaduna State and the FIRS work together to implement these initiatives, the partnership is poised to set a benchmark for other states in Nigeria. The successful execution of these reforms will serve as a testament to the power of collaboration in achieving economic progress and improving the quality of life for all citizens.
Recently, the Senate established an ad hoc committee led by Senator Abba Moro to address contentious provisions in the proposed tax reform bills. This committee was tasked with interfacing with the federal government to resolve these issues. The committee held a closed-door session with key government officials, including the Attorney General of the Federation, Lateef Fagbemi, and the Chairman of the Federal Inland Revenue Service, FIRS, Zak Adedeji. Ejura Etu Opanachi has details.
During the meeting, significant progress was made in clarifying and resolving the perceived gray areas in the proposed legislation. The discussions focused on synthesizing the entire process to ensure that the final law would serve the interest of all Nigerians. The committee's efforts are expected to pave the way for the passage of the tax reform bills, which include the Nigerian Tax Bill 2024, the Nigerian Tax Administration Bill 2024, the Nigeria Revenue Service Establishment Bill 2024, and the Joint Revenue Board Establishment Bill 2024. Senator Moro expressed confidence that the bill would soon be passed into law highlighting the positive engagement and collaboration among all stakeholders involved. The successful implementation of this reform is anticipated to enhance the country's tax framework, improve revenue generation, and align fiscal policies with national development goals.
In a significant step towards boosting agricultural development in Nigeria, the Agricultural Center of Excellence recently held its kick-off meeting, marking the commencement of the Renewed Hope Infrastructure Development Fund, NHIDF. This initiative is part of President Bola Tinubu's broader strategy to enhance the country's agricultural infrastructure and ensure food security. The initiative is focused on integrating farming, housing, mobility into one sustainable ecosystem that can be replicated across board. Aisha Blink-Adur has the reports.
The meeting, hosted by the FIRS boss, Zach Adediji, and attended by the key stakeholders, including other government officials, agricultural experts, and private sector representatives, focused on outlining the objectives and strategies of the NHIDF. The fund aims to invest in critical agricultural infrastructure such as irrigation systems, storage facility, and logistic networks to support farmers and improve productivity and enhance the ecosystem. In his opening speech, the Executive Chairman FIRS, Dr. Zach Adediji, highlighted the goals for the meeting: create a sustainable and efficient agricultural sector that can meet the growing demand of the population. The kick-off meeting also addressed the challenge faced by the agricultural sector, such as post-harvest losses and inadequate infrastructure. The NHIDF aims to tackle these issues by implementing robust agricultural infrastructure networks and promoting best practices in farming. The fund's initiatives are designed to align with global standards and ensure that Nigerians' agriculture remain competitive on the international stage. With the NHIDF in full swing, there's a renewed hope for the agricultural sector in Nigeria. The fund's focus on infrastructure development and technological innovation is expected to create job opportunities, boost production, and enhance the overall economy. This initiative represents a significant step towards achieving President Tinubu's vision of a prosperous and self-sufficient agricultural sector in Nigeria.
The coordinating director of the Emerging Taxpayers Group, Kabir Abba, has called on taxpayers to continue to pay their taxes and expose themselves to the various enlightenment tools created for easy tax transactions. Mariam Jode Adura has the reports.
In a bid to get more taxpayers into the tax net, the service is collaborating with professional bodies as part of strategies to make for easy tax consulting to taxpayers. Mr. Kabir Abbas stated that the 2025 goal of the Emerging Taxpayers Group is to educate, enlighten, and nurture potential taxpayers into the tax net. He said help desks are available in all FIRS offices across the country, which taxpayers can approach for information. Speaking on the role of staff for efficient service delivery, he said trainings will be strategic and have direct impact on the roles of staff. He said infrastructural developments are about to commence across the country to give staff a conducive working environment. Abba spoke on enhanced digitization of the entire service.
Just some months ago, it was last year, we innovated something called the tax clinic. And your office, I can remember, as part of the offices that I used, was a 5-day event, and we invited the CAC and NIMSI. We engaged the Nigerian Bar Association. And after that 5-day engagement, we registered over 100 law firms. We got a testimony to that. So that was what prompted me to now say, okay, in that case, let's us do more tax clinics. We can do with maybe say the NMA. We will have a lot of business segments, especially within the emerging taxes group. So what I mean by blockchain management, if you take the eastern part of the country, we have nature of businesses that they do have there to cluster such businesses because all their turnovers are way above. In fact, for a lot of them, their turnovers are even within the large tax category and medium and some, within the emerging taxes group. So what I mean by blockchain management, it can be the Nigerian Bar Association, like over 100, will still do more. It can be the Medical Association of Nigeria. It can be our brothers in, not CAC, Alaba Market. I had a session with them last 2 years or so. We have over 17 trade unions within Alaba Market. To have to just see those that are viable and promising, to now cluster them. So in each office, we'll appoint a relationship manager. There will be enlightenment. They will educate them and make it simple for them to register. What is important to us in emerging is compliance. Because by the time we get you into the net, and of course collaborate with TDMD, get information about you, we nurture you, we grow you. You understand? 25 trillion is doable. And for us in the emerging taxes group, should expect a lot of enforcement this year. Sections 33, 34, 35 of the FR Establishment Act has put up stages and on how to do compliance and enforcement strategies. We'll do more of that. Why I say that is because I have 29,000 now, 29,000 inactive taxpayers that I have discovered and have created what I call the file manager in each office. So every tax controller, with the touch of a button, will see it's inactive. And we have given them guidelines on how to go about them. And we'll follow due processes. In as much as we want to be customer-centric with our taxpayers, at the same time, they have to pay their taxes.
That's the size of our news package. Now, to our Did You Know segment.
Did you know the tax rate for PIT, personal income tax, ranges from 7% to 24%, depending on the amount of chargeable income? Any employer who fails to file a return shall be liable on conviction to a penalty of 500,000 naira for body corporate and 50,000 naira for an individual.
Over now to Mariam for our Vox Pop segment.
Hello and welcome. My name is Mariam Julie Adura. Today we're out to find out what people know about the personal income tax. Come along with me. What do you know about personal income tax?
Then the personal income tax is simply, let's assume now I'm a civil servant, you understand me? Then the ministry, they are collecting the tax from my salary. Yes, so whichever organization you're working for. So the personal income tax, from your salary, they collect it indirectly. Yes.
Which tier of government is responsible for collecting the personal income tax?
And I think most of all these tax, I think it's federal inland revenue. They are mainly, as I know, responsible for all this tax. Unless maybe there are some other small agencies that I can be agents to partner with them. But mostly it's the federal inland revenue. They are responsible for the tax collections.
Personal income tax, these are taxes that are collected from incomes of like individual. For example, I am working and then I receive salary and then I am being taxed.
Okay, so what is personal income tax?
Personal income tax is what individual pays on their income.
Which tier of government or who collects the personal income tax?
Personal income tax are being collected by the states, while company income tax is collected by the federal inland revenue. But like in the case of FCT, federal inland revenue takes care of both the personal income tax and the company income tax. Even the personal income tax is categorized by what you earn. If you earn below 1.6 million, you pay 19%. Then if you earn below 3.2 million, you pay 21%. While from 3.2 and above, you pay 24%.
now join Ashu for our Knowledge Zone.
My name is Ashu Abe. Welcome to Knowledge Zone. Today, I'll be shedding light on the responses we got from the Vox Talk segment on personal income tax. What is personal income tax? Personal income tax is tax imposed on gain or profit from any trade, business, profession, or vacation, or any salary, wage, fee, or allowance, or other gains or profit from employment of individuals. Who usually collects PIT, personal income tax? FIRS collects this tax from non-residents of Nigeria, members of the armed forces, police, officers of the Nigerian Foreign Service, while State Inland Revenue Service collects from residents of their respective states.
And now to our professional insights.
The current tax table was introduced in the year 2011. Due to high inflation and lack of review, the structure has resulted in fiscal drag, where many low-income earners have been pushed to the top tax brackets over time. This means that an individual earning just 400,000 naira a month is paying the same top marginal income tax rate as a wealthy individual earning, say, 20 million naira per month. Therefore, the tax table has become regressive rather than progressive as it was originally designed. Also, the current personal income tax regime does not encourage formalization, given that the effective top tax rate on companies is nearly double that of enterprises, which also encourages arbitrage in some cases between the two income tax regimes. Hence, the proposed changes seek to address these issues and simplify the system by incorporating current reliefs and allowances into the bands and rates to achieve an overall lower effective tax rate for the majority of workers. This perception is not correct, not at all. Individuals earning about 1.7 million naira or less per month will pay lower pay tax under the bills, while those earning the new minimum wage and slightly more will be fully exempted. These thresholds will result in over 90% of workers in the public and private sector paying lower taxes, while high-income earners will pay slightly more in a progressive manner, up to 25% for the ultra-high net worth individuals. No. Besides the 800,000 naira per annum, which is exempt from tax, there's a rent relief of up to 200,000 naira per annum, which together will exempt individuals earning up to 1 million naira per annum, which is about 83,000 naira per month. This is particularly beneficial to low-income earners. Also, the new tax bands and rates have been designed to avoid a situation where individuals earning slightly more than the exemption threshold are taxed to an extent that makes them worse off than a person whose income is within the exemption threshold. For example, a person earning 30,000 naira per month is exempt from tax, while a person earning 30,001 naira per month will pay about 500 naira, leaving the latter with a net of 29,500 naira, which is of course 500 naira worse than the person earning 30,000 naira. Under the tax bills, this problem has been addressed as everyone will be eligible to the first tax-free bracket. By comparison, the second band under the bills, which is to be taxed at 15%, is currently being taxed at a marginal rate of 21%, even after all reliefs and allowances. So while 15% may appear steep from 0% for the first band, it is lower compared to the current tax table. The real impact for a person earning about 3 million naira per annum, equivalent to the aggregate of the first and second brackets, is a lower effective tax rate of 10% compared to about 12% under the current tax table. No. One of the objectives of the tax reforms is simplification. The impact of the Consolidated Relief Allowance and Personal Relief are being incorporated into the tax table, such that the overall goal of exempting low-income earners and reducing taxes for middle-income earners is achieved. By integrating the reliefs into the tax bracket and rates, many taxpayers with basic education will be able to calculate their taxes with little or no assistance, thereby achieving the dual objectives of lower tax burden and lower simplification. Statutory deductions, now referred to as eligible deductions, are still applicable under the new tax bills. These are contributions under the National Housing Fund, National Health Insurance Scheme, Pension Reform Act, interest on loans for developing an owner-occupied residential house, annuity or premium paid for life insurance, and of course, rent relief up to 200,000 naira per annum.
Let's join Amina on What's on the Net.
Welcome to What's on the Net. I am Amina Adiola Abbas. Today on X at 100 Naira Point says, please, how can I get TIN for my registered business? I've checked your website and I couldn't find where I can register. Well, you can visit the Tax Pro Max website at taxpromax.firs.gov.ng. On the home page, click on Register, Next, select Corporate Affairs Commission CAC, enter your RC or BN number to validate your company's details. An OTP will be sent to your email or phone number, depending on your selected option. Input the OTP to complete the registration process and your TIN printout will be ready. At TenoG24 on X says, the last time I tried to obtain evidence of filing tax returns from the TPM, this was simply impossible. Aside from an ordinary screenshot of the filing page, if there is another way to do this, kindly explain. Well, you can always obtain your receipt of evidence of payment, including withholding taxes, from the e-services platform. Simply log on to tcc.firs.gov.ng using Tax Pro Max login details, and you can generate your receipts from the homepage. Alternatively, if the payment was made through Remita or InterSwitch and you still have the payment reference number, PRN, you can visit the homepage of the respective payment gateway to reprint the receipt or invoice.
And that's our package on today's episode of Tax File. We'll be back with more updates soon. Don't forget to follow us on our social media handles. Join us same time next week for another interesting package. FIRS, simplifying tax, maximizing revenue.
Chairman here.